Yields on Spanish and Italian bonds rose as Spain planned new austerity measures and workers in Greece strike to protest austerity measures. Tablet wars continue as Barnes & Noble adds 2 new HD versions of its Nook tablet to its offering ahead of the holiday shopping season. I'm Lindsey Bell, and the Morning Call starts right now.
Good morning, everybody. I'm Pete Renzulli, Class B member, T3 Trading Group.
And I'm Lindsey Bell of TheStreet. Together we bring you the Morning Call. We heard Philly Fed President yesterday saying that QE3 might not work. This morning we got more negative news out of Europe. And despite all this, our futures are pointing to about a flat open. What does this mean going into today? How do you set up your trading?
Well, I think everybody today came in, or was coming in, we're here early obviously, is looking for some significant follow through both off of yesterday's down day, the viciousness of the selling into the close, and the bad news, and so far we haven't got it. So I think what the smarter trade looking at this morning is looking to buy the lower opening today. Okay,
and then just looking at the S&P first and foremost, though, what levels do we watch there?
Right now, right around 144. Right at that level, or even a little bit slighter opening. If we go to the charts here really quickly, we can see from about 10, 12 days ago, we had that push up and like a 4-day pause in there. So not only is it representing yesterday's low, the 21 EMA and the daily, it also represents the last spot that the market took a pause. So we can reasonably expect that to happen again today. So right around 144, give or take a quarter, be the level to start looking for a bid today.
Okay, what's the risk of more downside here?
I never like to use overbought or oversold because you start to, in your mind, say, well, it's gone too far, and then we just keep going that direction for a while. We have had 4 to 6 months of we haven't pulled back at all. It's interesting. The risk of the downside is it's just normal reaction to price. At some point, people are going to take profits and that kind of thing. And risk is also measured by how you manage the initial position. So if you're already long, you could be hedging the downside with puts, or you could just be scaling out of some of your positions, which is probably not that bad of an idea as we started to push up into those key levels. So it really depends on whether or not you're already in a position or not. And interestingly, just to tie that into actually doing mentoring, you don't have to be doing something. Yeah. So if by the very definition, if we're in a potential change of trend, that flat out means we're not clear. So if you're not in a position, you're not sure what's going on, stay on the sidelines until it is a little more clear to you.
That's fair enough. Let's get into the sector spotlight with some of Stephanie Link's new investments. She's over at Action Alerts Plus now. Some of these names are tied to the housing recovery. Her and Jim Cramer have been bulls on the housing recovery for a while now through investments in Weyerhaeuser and some of the banks like SunTrust and Wells Fargo. But one of her new investments is in Bed Bath & Beyond. Now, this stock took a big hit when they reported earnings that missed analyst estimates last week. It was kind of deja vu with what happened in the prior quarter. But now that the stock is down, it looks like it's starting to stabilize. I mean, this company did reiterate its full year guidance for 2012, which was one of the positive notes out of the report, but it is below a lot of its moving averages. So what levels are you watching here, Pete?
Last time we gapped down in June, we basically pushed down to 60 and never pushed through there. Basically the same type of gap down. It was a monster gap down, didn't get much follow through. 60 seems to be the level. So if you're looking to initiate a new position, you don't have to go in all at once on your initial piece. You can work in order down into that level with a very defined risk, which is right around 60. If we hold 60, 68 from where we just gapped down to would be the level that we'd be looking on the upside. Okay,
great. Home Depot is another stock that Stephanie is starting to get into. This has been a best in breed. It's had a great run all year, and I know Stephanie has been a little relinquent to get in there, but I think QE3 did it for her. She's like, you know what, this stock's going to keep going up. It's above all of its key trading averages. What type of movement do you expect here?
I think if we could first go out to the monthly chart, just to give everybody perspective on the time frame you're talking about there, we are essentially vertical since the middle of last year. So there's been tremendous buying in this leading up to where we are now. Now, something that's very interesting from a technical perspective is if you look for the majority of August, we didn't move at all. And that's essentially, it's one of two things. It's distribution after a significant move to the upside, and distribution usually occurs when you get a pause after a significant move on heavy volume. We saw the pause, but we didn't get heavy volume, and now we pushed up, and if we look at the charts here, you can see that the last 7 or 8 trading days, there's been a lot of indecision, even though we've been making higher, where we've been closing off of the highs and at or near where we opened. So to have a decent amount of intraday range, but closing where we opened. There's a lot of indecision up in that level, and the volume is increasing. So if we could just foreshadow a little bit, the chart that we see here in Home Depot, where we had a big reversal candle on monster volume after a significant move to the upside, was very similar to what happened in GG last week, and now you can see GG starting to roll over. Completely unrelated as far as what they do, but from a technical perspective, you have to start to form if-then scenarios of, if this happens, that means this to me, and then start to allocate money accordingly. Even if you're not looking for what would be considered an aggressive sell short because of the push to the upside, you have to, again, going back to Home Depot, long is absolutely the right side to be on. But your point before about how do you measure the downside, this is not really going anywhere. You know, price targets of $70 has been put out for a while. Where do you think it's going to go after it's been vertical for a year? Long is the right side. It's a question of how much room is left in the trade. And I don't like what I'm seeing here from a technical perspective. I'm not fundamental. From a technical perspective, I see a lot of indecision at these new highs. Okay,
well, that's good to know. Key Corp is another stock, another bank that Stephanie's playing the housing play with. It's got 20% of its book in mortgage originations. They got a great restructuring program that's underway right now, and it's trading at a 10% discount to its book value, which is why she kind of favors this over SunTrust. She's taking profits in that one there. Now, yesterday, this one pulled back with the broader market. Is this a good entry point? It has had quite a run, though.
I actually like this. 840-ish is where we consolidated last time, and now we're only about 10 cents away from that. So setting it up from a trade perspective, from a macro picture, a little bit longer time frame trade, anytime we look at a position, you want to say, okay, how much risk is in the trade for how much potential reward? So this actually has an interesting setup. 840 area is the risk point. Just above $9 is the last place sellers did something significant in the last week. So you could build a position into 940 with the intention of liking the fundamental picture for it to take out 920 and ultimately make another move past her. So this is actually a pretty good setup here from fundamental perspective, as well as really a clean technical setup.
Okay, SBUX is another new position here. It's not a housing play, which is nice, but this one has been plagued by its exposure to Europe. So expectations in this stock have come down. Now, we recently heard from the CEO that they think they've seen the worst in Europe. They've got a great product lineup, and by the way, coffee prices are coming down. That's definitely going to benefit this company. So with the lower expectations and the given valuation right here, Stephanie likes it. But is it a trade?
We actually were talking about this in the active trader mentoring room yesterday, and a couple of people wanted to get long. It opened very strong yesterday morning, probably first 45 minutes or so. Again, getting back to actually setting up the trade, the way you're wording it is perfect. The downside was very limited because you're just looking at today's price action, but the upside wasn't there. The conversation that we had in the room was it has to clear 52 in order for it to have any room to justify the risk. And right now, from a trading perspective, it's between 49 and 52. So as far as I'm concerned, that's the right price for the stock. Now, if you have a longer-term outlook on the stock, the downside in that $3 range is very, very well defined. So you could start building a position within that range, knowing exactly where something would have to happen to tell you the picture changed. If it breaks below 49, which is right around the 200 EMA on the daily as well, phenomenal reference points for the downside. If it pops above 52, you're looking 54 and then 56.
Okay, great. Well, we're going to take a quick commercial break and be back with more.
Hi, I'm Scott Redler, Chief Strategic Officer for T3 Live, and I would like to invite you to join us on October 6th and 7th in New York City for our first annual T3 Live Active Trader Super Conference. The two-day event will focus on what we believe to be the 5 keys to being a successful trader. We will teach you the strategies, tactics, and mindset we take to the market every single day, and you will leave the Super Conference with a personal step-by-step success blueprint. Visit t3live.com and click on the education tab on the top of the page and watch preview videos of this event. Seats will fill up quickly, so be sure to reserve yours today. My colleagues and I look forward to meeting you. Have a great day.
Welcome back. We're going to get into the trenches with some healthcare and pharmaceutical names. We'll start off with Pfizer. This company is going through a transitional year. They're selling off some businesses, selling portions of other businesses, and they're trying to really focus on their pharmaceutical business. Now, this stock had been in a consolidating range since July, but it recently broke out of that range, and it's kind of extending from its 8 and 21 days. So where can this stock go? Can keep the momentum?
I like that it finally pushed through this basically 8-week range. The upside right now, again, just from a technical perspective, 28 is the level everybody will be watching for it to have something significant. So if you got involved, very much like we just talked about with Starbucks, it's in that range and you can start to initiate a position. If you got involved in the 23.50, 24 level, and now it pushed up and is doing quote unquote what you want to see happen, you have a nice target of 28 to the upside, 24, depending on where you got involved, 24, 24.50. So above 28, the terminology I use is has room to go.
Yeah.
So I like it up to that level. That would be the first area you'd have to make a decision in the $28 level. But I like this breakout here a lot.
Merck is another pharmaceutical company that has been focusing more, though, on research and development, given that a lot of patents are coming off of the market soon. Their earnings have been kind of hit by this, but I think it's given investors more confidence in the name that their plan going forward is legit. Now, it hasn't seen quite the move, though, that Pfizer has. So what do you do here?
This is actually a little bit different from a time frame perspective. If we can go out here to the monthly charts to get a little bit longer term picture, this stock is essentially consolidated, give or take, in a $5 to $6 range for almost 2.5 years, and now we're finally breaking out. So again, getting back to how much is in the trade from a reward potential for the risk you have to take, just around $60 is about $15 away. So you have some room to go here. This, from a volatility perspective, this doesn't have a massive average movement on a regular basis, but it doesn't have to be fast. It just has to be obvious.
Yeah.
And the skill then comes in managing the trade once you got a hold of a good one. The upside here is $15, just around the $60 level. This one took a lot longer to play out, but from a trade perspective, you have to say, okay, it was in that range for a long time. If the trade does, quote unquote, what I expect it to do, and there's no reason to get out of it, 60 is the level above here.
Okay, so do you take Merck over Pfizer for a trade?
From a reward potential, absolutely.
Okay,
Yeah,
great.
absolutely.
AMGN is a stock that has been consolidating in this $80 to $85 range for a while now. Also, yesterday the stock was up about 1%, so it's hitting on the top of that range. What level of resistance do we need to be aware of?
Right here. There's no other way to say it. We're actually at levels going back to 2006 right now. So
Okay.
right around the 85, 86 level is, again, I'll go back to what I teach. That's the level sellers say that's the right price, and until we see something different, that's where we're selling, and that's where the distribution is going to come in. Now that we're at that level, you must, again, to be a prepared trader, you have to have alarms set for just above this level. Now, it's interesting to set it up as a trade. Because we haven't been able to get through this level since 2006, you can't get involved or shouldn't get involved the first time it takes out the level. So it's interesting from a trade management perspective. You want to wait for a little confirmation through this level, which more often than not will be a couple of closes or maybe what we call a flag above this level to have confidence and conviction that we'll finally push through there and something has changed for us to want to be long above this level, as opposed to getting involved where it hasn't been able to get through and your upside is limited to where it hasn't gotten through. So I like this long above this level, especially because it's very similar to what we did in Home Depot, where 52 was the level that we couldn't get, 52, 52.50. I want to say probably around 3 months ago, dating back, I think 10 years, actually, and we finally pushed through that. So very similar. Once it gets through there, then it's just a question of where is the room to the upside. So I like it above this level, but not the first time it hits there.
Okay, so a good one to watch, maybe.
Yeah, exactly. Set an alarm for it above 86.
Okay. Aetna is a health benefits company. It's been kind of a laggard for the group right now. They're going through a merger with Coventry. They're trying to expand their business into Medicare and Medicaid with all the healthcare bills that are out there right now. But the key issue for insurers here is pricing. So that's been impacting this one. Now, that being said, though, it's been on a rally for the last 2 weeks. It's regaining some of its key moving averages. So is there a trade in this one?
No.
No.
No, I'm going to tell you why.
Trade's been made, maybe?
If you look at, if we go back to the charts here, the stock is essentially sitting between 37 and 39.50 since the middle of June. So again, getting back to the perspective of what's the right price, and obviously whether you're a technical trader or a fundamental trader, the right price is dictated by a catalyst. Whether it's a fundamental catalyst or whether it's a technical catalyst, there's nothing that's pushed the stock out of the range in 4 months, 3.5 months. So as far as I'm concerned, it just hit the top of the trading range it hasn't been able to get through. It pushed through the 200 moving average on the daily chart and failed. Pushed through the breakout, which was the August high, and failed. So essentially the top of the trading range that's been holding for 3 months failed.
Yeah.
So again, until it gets through here, there's nothing to do. So from a trading perspective, this is actually a sell short right around this 40-50 level, the closer you can get it there, until we push through. And then even if it does push through, 43 is the next level, so how much upside is there?
Yeah, not much.
No, so again, from a trading perspective, 37, 39.50 is the level. Until it gets through there, I don't see anything to do here, unless you're a shorter-term trader.
Okay, one more healthcare name. We'll look at Bristol Myers. Actually, Stephanie Lincoln, Action Alerts Plus, owns this stock. She liked it because it got hit hard when they stopped their hepatitis C compound. They shut that down. It lost about $5 billion of market value at that point. It's been on the upswing. It's seen some strength, but it's still below the price it traded at before they made that announcement. So she still likes it here. What do you see in the stock? It's above its, I think it's some of its key moving averages now.
I think there's two different things to be watching here as a trader. First and foremost is yesterday we sold off on very, very heavy volume. You can't like that if you want to be long.
Okay.
However, as a trader, we keep going back to what significant reference points you're watching, and you can see here for roughly 4 weeks, the 200 period moving average, we traded above it, traded below it, traded above it, now we're back above it. That's not the point I want to make. First, that shows indecision, but now the key here is the 8 period moving average on the daily has turned up and it's above all of the key moving averages. There's a difference between a potential change of trend and a change of trend, and the fact that we started to push up now, this technically is a change of trend to the upside. I like this long as it holds above 33.75, 34 area. You have all the way back to 35.50 and ultimately 36 for the next levels up there.
Yeah,
so as long as it holds above the levels that it just broke out from, I think you're okay here.
Okay, let's do some quick hits. We'll start with Apple. What action are you watching there?
Apple, people still trade Apple?
Yeah.
Oh my God, I can't believe that. Look, Apple had, it got to the level everybody wanted it to get to, 700. Pushed above 700 and we haven't stayed there at all. Yesterday, 2 days ago, Monday morning, a lot of people who were long over the weekend got a reprieve. We had a $12 rally off the low. So if you were long heading into Monday morning, you got slapped silly pre-market.
Yeah.
Apple gave you a gift. However, immediately the next day we sold off again. So 2 distribution days at a very significant level. Look, the bottom line is it a long? Of course it's a long.
Yeah.
But from a trading perspective, can you afford to trade a stock that has $17 intraday price swings?
Yeah.
So you have to pick the right battle. So if you are funded properly, it can be exciting to trade. It can be profitable to trade. But if you're not funded properly, the downside has to be managed. And look, we're still in an uptrend here. We just pulled back. We just broke the 21. This is a very similar stock to what I talked about with the spiders before. You can't, and actually there's something we talk about in the mentoring as well. Does one day turn around 5 months worth of an uptrend?
Right.
No, it's an alarm. It's something to be looking for. Now, if you start to have those down days on massive volume, that's different. That's a little bit different. We did see a push down yesterday, but it was on less volume than the prior day. So I like for trade today, I like a lower opening to buy today. But you have to be very aware, if I bid a lower opening today and it doesn't hold, you have to be quick to pull the trigger on it and say the trade's not working out, let me reevaluate or find a better spot. And from a trading perspective, it's okay for the first trade not to work out. If you put the first trade on in this stock and you like it because the idea is more important than just the fact that you put on the first trade, there's nothing wrong with putting the trade on because it's a good idea, kicking the trade out if it doesn't work, and then re-entering when you get another signal in the strong stock. The fact that it's a strong stock is more important, not the fact that you got stopped out on that one trade. A stop out doesn't invalidate the idea. So the idea here is absolutely still long. I'm looking for a lower opening to bid today.
Okay, what about Google? This one also seemed to take a break here. Is there a sell signal that we're seeing?
Sell or sell short? Which one?
Sell short.
Sell short is very risky.
Okay.
We have some people who have been trying to pick a top in this stock for a while now. Clearly hasn't worked out for them. So it's very, very important from a trader perspective, as you're setting up your days, not wanting to be long versus wanting to be short is not the same thing.
Yep.
So in this perspective, I can absolutely see where you would say, wow, big volume down day yesterday, we closed near the lows. Let me be aggressive. And I will give you an idea from a trader perspective from earlier in my career where I made a lot of bad decisions in reference to a very similar pattern like this, where you feel a stock is going up, and if you're the person who catches the top, it's got so much further to fall, it's going to be like hitting the jackpot.
Yeah.
It is wrong thinking. Because what you want to be doing is you'll short these stocks, manage it, and what will end up happening is it won't go down. You won't lose that much money. And at the end of the day, the week of the month, you say, wow, the stock was the strongest stock on Wall Street, and I only lost X. So you don't want to be shorting the strongest stocks. You want to be going to stocks that are already weak and looking for them to short sell if you feel the market's going to roll over. So if you're not long already,
Yeah.
let it pull back a little bit to 735 in that area, right around the 80 MA, which we've been holding above for the better part of the last couple of months. So if you're not long already, I would let it pull back a little bit more, right at 735. If you are long, personally, if I was long from lower levels, I'd be tightening up or scaling out because of what happened yesterday.
Oh, okay. All right, well, that's actually all the time we have for today. Those are the stocks we're looking at, the sectors we're watching, the levels in the S&P that we've got our eye on. Be sure to check in at the end of the day with the T3 Live team for the daily recap.